Good morning. I've been streaming and then I realized that I didn't press go live. So I'm here just doing all my analysis and oh well. Start over. Start again. It's funny. Such an idiot. Let me redo it, huh? No, I didn't go live on YouTube. Have you refreshed now? Oh, David is here. All right, let me just redo this. So anyway, let me just go back quickly to what I was saying. So yesterday I had a plan, and my plan was to take the SFP off this high and this low, and I fluffed both those trades. And the reason why I fluffed those trades fundamentally was because I was too focused on other things and not focused on my trade plan. So initially the swing high SFP was correct. I didn't take it because I was streaming, and then I should have just taken it, and I didn't take the back test. So it was a bit stupid, really. We can all be a little bit stupid sometimes. It happens. And actually the back test came in to the golden pocket. There was many ways to enter that. Losing the golden pocket after the retest of the value area high. There was lots of entries basically. And so that was a fluff. And then also when it came down to swing failure, I fluffed that too. For some reason, I don't know why. And even in the consolidation, I entered long and then I closed my long because for some reason I formed a bias that possibly we would head a little bit lower. And I posted that and it didn't happen. So there's a few things that I did wrong yesterday, and I think one of the reasons why I fluffed everything was because I was overly looking at XO charts and not really focused on my trade plan, which I had made. And then the other thing was that on XO, when I was looking at the price action in the high, I was looking for liquidation bubbles, and I didn't see big liquidation bubbles in the high or the low, and that was a little bit off-putting. But it's a lesson learned that you don't always have to see those big liquidation bubbles in the areas of interest to take the trade. So here I was looking for one of these blue big liquidations, didn't happen, and I was looking for one of these kind of pink liquidations that didn't happen. Morning, warm. So it's really important that when we make a trade plan that we don't allow external influences to bias our original idea, and just execute the plan and follow through. And the other thing that I was thinking was possibly that this harmonic idea that I had would go a little bit deeper, and I was holding out for that and it didn't happen. And so naturally you can argue that that was it. Doesn't look right to me. It feels a little bit short, but you know, the markets aren't perfect and sometimes these are correct. You just have to go with it. Could it go down further? Yeah, it could probably actually go down further. So potentially we're still going down. Potentially it is still going down. So if it does go down, that idea is still in play. And I will still take that. This doesn't really matter. Potentially I am still thinking. So there's a couple of things that I'm thinking right now. I'm thinking that this is still a correct harmonic. Maybe that wasn't the pivot. Maybe it is still happening. As long as that C isn't invalidated by a higher high there, and as long as the timings are about 1-to-1 on this second part of this triangle. So let me have a look at the fib time to see roughly what I'm looking for. Yeah, something like that. As long as it's something like that. So it's balanced with fib time in terms of the distances, then that's still possible. And then the area of interest is going to be basically the point of control of this previous range. And the reason why that's an area of interest is because it's also lines up. It actually lined up with a few things. The swing, it lined up with a single print, it lined up with some other levels, and it also lined up with the fib extension of let me see, which one was it? It was from here to here. Extend. Yeah, that 1.272, that kind of lined up. So I'm still interested in that, and that was that. This trade is still on the table. I'm still thinking about this trade. So what would have to happen now is like you would have to kind of start to make your way down and then take the trade like that. And you'd be completing, this would be the completed harmonic. It's hard because you're trying to not get biased by the price action, but this is still in play. So I'm not saying this is going to happen. I'm just saying that if it did happen exactly the way that I had planned it, then I would take it. If it doesn't do what I'm thinking, then I'm not going to take it, period. So let me just take that and rename that cypher. Then the other thing I was thinking is possible is this. So I'm thinking two things. I'm thinking because we've taken the liquidity from both sides of this range and we haven't had a squeeze, we're possibly either creating some sort of megaphone idea, and to break out, that's what you would need. You would need to capture the top of this trend line, reclaim that into support to go up. So you need that kind of idea to go up. Or we go up and we make a lower high and you start forming some kind of diamond as well. So there's a few things that I'm thinking that could develop in this range from where we are now. And obviously it doesn't mean that I'm not going to take this trade either if this presents itself. So basically what I'm saying, anything can happen and nothing is set in stone. And the reason why is because we've taken the liquidity from both sides. We don't necessarily expect there to be some kind of crazy squeeze now. So it is possible that we range for longer to see what happens. And it would make sense that if we don't get any kind of crazy breakout anytime soon, that we do start to form some kind of, either we go fully fledged megaphone or we form some kind of, now start compressing again and continue range up and start compressing again. There's so many things that can form. You just have to see what starts to form, and effectively what you're looking at is continued ranging. I don't necessarily think that we're going to not range. Like, I just don't see it. I think the chance of breaking out was yesterday, and we didn't see liquidations on either side of the range. And that's really what you need to see a breakout. You need to see a squeeze. And because on XO I showed that there was no liquidations on either side, it's going to probably, I think it's probably going to mean that we're going to range for a little bit longer now. Yeah. And the reason why you range longer is because you need the range to continue to give price action time to build liquidity above and below these pivots, so that the next time the price does go up, then you'll get a short squeeze up, or if it goes down, you get a long squeeze down. Yeah, and we need time now for the range to continue developing, so that as people now are starting to trade the range, continue trading the range, that naturally their invalidation will be at the pivot high and the pivot lows, and over time you're going to have a build-up of liquidity, so that when you do eventually take those levels, that there could be some kind of a liquidation event. But that's only going to happen as we develop, as this range continues to develop longer. And the reason why it might not happen today is because we only just cleared those levels yesterday, so there isn't really enough time for liquidity to build now on those two pivots. So I do think we're just going to continue ranging. Unfortunately, it's going to be boring, and let's see what happens. Let's see if we develop into a diamond, some sort of megaphone, or whether we do go lower just to form some kind of bullish cypher. This, I think, would be my preferred plan, just simply because it'll be easy to trade it. It'll be very easy to trade that, and if we do get some kind of bullish cypher, then we might now then start to see an increasing volume to start making a move up, you know. And that's kind of what you want to see. You want to see the sentiment to go bullish again, start ranging in the highs for continuation. That's kind of what you want to see for Bitcoin. That might not necessarily happen unless we go lower, to pick up new liquidity, or for the range to continue, so that we get a squeeze in the direction of travel. And so there's a few things that need to happen in terms of the range for us to get that kind of explosion. And at the moment, I just don't see that we're ready for it at all. And potentially what you could see now for to the end of the month is continued ranging. That's kind of what I'm expecting. I'm expecting that. So that's something to bear in mind. The end of the month is going to be the 29th of February. So I don't know if I'm expecting a big breakout before the end of the month now. And let me have a look at the monthly candle quickly. Yeah, that might be it. We might just stop here, potentially, which is a really bullish month to end with. If we were to stop here, that would be very bullish. I don't think it would be bullish to close underneath the previous month high. I think that would be not bullish, considering we've been ranging above the previous month high for such a period. For us to close underneath the previous month high, I think that wouldn't look good at all. And then obviously if we were to close even lower underneath these previous highs, that would look even worse. So that's just something to bear in mind for the end of the month, which is in a few days' time. And then what else is there? Let's have a look at the weekly candle to see how this week ends. Actually, it's not ready. It's 3 days. I don't like this candle in the highs, to be honest with you. This is certainly not ready, and it is possible that it goes up or down. Like, I don't like this candle at the moment. So the weekly isn't ready yet. This 3-day candle took the liquidity from these lows, so that's quite bullish. It's quite bullish. We have to see how this candle closes. It's possible it just closes where it is. It just ranges and it just closes where it is. And the daily candles. This yesterday's candle is actually quite a bullish candle. And you're taking liquidity from the lows. You're closing back above these these closes back in the range. That's actually quite a bullish candle. It's a bearish candle because it's red, but it's bullish in the sense that the bears were unable to close it in a bearish way. The bears were in control yesterday, and there was still bullish reaction to the bearish candle. It took the liquidity from the lows, and the candle was unable to close at the lows. It was closed away from the lows. It's not bullish in the sense that it's still closed underneath 50% of the previous candle's body, but the reaction at the lows, not closing at the lows here, is bullish. So it's a bullish reaction, but it's not a bullish candle, and it's just a hint. It's just a clue that the bulls are still here. They haven't gone anywhere. And so today it is possible that we make another attempt at the lows. It's possible. And then we go back up. It's possible we close the lows, we go back up. And there's so many things that are possible. You just have to think about the trade ideas and the trade plan. So that 12-hour candle yesterday closed lower. This is why I got overly bearish yesterday. And then actually it closed back up. So there's a bearish close followed by a bullish close. And if this 12-hour candle, the current one that we're in, closes above that line, then that's like a bullish hold or a bearish failure. And potentially then you could have a next 12-hour candle continue upwards as far as candles are concerned. It would be more likely to go up than from here to go down, just simply because of the way the 12-hour candles are closing. And I identified a line here where the 12-hour candles had failed to close underneath this line. Yesterday, for the first time, it closed under, and then it was brought right back up. And now we're looking to back test that same line, potentially to test it to go up and close higher. Potentially something like that could look correct in the context of the way this range is formed or is forming. But I mean, I don't know. No one really knows what's going to happen. We're just having a look at the price action and just seeing what could happen. And it just looks like the range continues. Basically, that's what it looks like. So boring, but the range is continuing, and just keep an eye on these ideas and let's see which one starts to form. Potentially could short if we form a lower high there as well. So we'll see how the price action behaves, and you'd have an invalidation of the C, and then you'd be looking to trade it down to there. What fib level would that be? To there. No, probably potentially 886. It's done. I've done this before and it's just completely broken out. So there's no guarantees that short's going to work. It's just an idea. And it'll be a lot easier after I've drawn this fib retracement. It'll be a lot easier to trade this short idea if you have an accompanied sign of weakness, followed by a lower time reversal. And so a sign of weakness would be to come back into the value area. You're not going to be able to have an invalidation up to the C then. You'd then be able to trade a reclaim of the value area with a maybe an invalidation back above this 786 line. That's kind of, that would be a lot safer, because then it will look like a lower high. The danger of trading a lower high is that, like I've shown here, the price can continue and take the liquidity from the C to form something else, potentially like some kind of widening megaphone style shape. And there's no reason for that to continue and break. It could just come down and just form something. Like, it can continue forming different patterns, and we just have to see what shape could develop. And then how to trade it, we'll just have to look at the reaction at those levels, and the clue is going to be a lower time frame reversal. And so if I hide these now, put this into my group. Okay, and then if I show you the 15-minute time frame at the reversals yesterday, there was a clue. And in the highs where there was an SFP, just looking at candles, just for next time when we're having a look, we can identify it. So I was hesitant about that because I saw a close above the SFP level. This 15-minute candle closing like that was the clue. And then the next clue was the high volume close back into the value area high. So there was a lot of clues for reversal, but fundamentally, this is not what you expect for continuation. This is not the kind of price action you're expecting. Closing back underneath this breakout candle with high volume, you've reversed all of this volume. Yeah, that's basically what happened. All of that volume was reversed in that pattern. And then the other clue was that this next candle closed underneath that line, and the next one just sold off. There was a few clues there. I think next time we're going to have a look at these candles and try and figure it out in real time rather than freeze. In the lows, when it did that swing failure, well, that was just basically a swing failure. You can see it was a swing failure because you had a wick that went down into that level, and it just, that's just a classic swing failure. And it was very hard to trade that, because even if you got the golden pocket, which was there, it still went down to try and make a lower low. It didn't. It made a higher low. It was actually quite difficult price action in the lows yesterday. It could have gone down, but it didn't. The clue was when it came back above this golden pocket, and then it came and back tested it there. That was the clue. So that last back test was the clue. Yeah, and the last back test, there was actually, what time was it? Yeah, it was still good though. The timing was still, I wasn't really paying attention, but next time round there is actually a trade there effectively, but then that would be a validation. Once you have that back test, you're not really expecting the price to do that then. Anyway, these are good to like analyze for future trading. Okay, any questions? Okay, I'm going to take a 2-minute break, and then I'm going to quickly go and do TRVL, because there's some things happening on TRVL. Just have a look.